the cost of building a company has gone to zero, right? So anybody can build a company, right? Previously, you needed to be technical to build a company. That's not even true anymore. So what you have ultimately at the end of the day is you have speed, right? Like velocity of learning, velocity of shipping product, and you have data.
Welcome to VC Uncovered, the series where we highlight the next generation of investors who move faster, take bigger risks, and build shoulder to shoulder with founders. I'm your host, Drew Glover, co-founder of Fiat Growth and general partner at Fiat Ventures.
Nicole Tommaso, thank you so much for joining VC Uncovered. I feel like we have had a super storied past. I like you're one of the first people I reached out to be on VC Uncovered. I've leaned on you multiple different times just to get your take on different things going on in the VC market, but it's a true honor to finally get you on the podcast. You are a busy woman, and it's for all the because you put the work over all the other shit that's going around. Also, an incredible follow on LinkedIn if no one's following. But Nicole, can you just kick this off by just giving us a little bit more background on you, what you're focused on, and what you're doing at Harlem Capital?
Totally. So for those of you who don't know, I'm Nicole. I'm a principal at Harlem Capital. I've been with the firm now for 5.5 years. I actually started as an intern and a fellow. And Harlem Capital is an early stage firm focused on backing the next generation of winners. And we primarily invest the seed, writing checks about $1 to $2.5 million. We like to lead because we actually like to be value add investors and stay close to our portfolio companies. And we are generalists, just looking for exceptional founders who are best in class in their industry.
Love it. Yeah, I've been a huge fan of Harlem for a long time. You've also really kind of scaled up in a meaningful way in like a fairly short period of time. Can you give me like a little bit more like insight on what that journey's kind of been like? Because you were very early in all of Harlem Capital's journey. Yeah.
I mean, I joined at the tail end of Fund 1, and now we've done Fund 2, and so that's been a journey. I would say we say that we're sort of at our Series A, Series B, right? And just like startups, venture firms have to scale, right? And so lately we have, I would say over the last year or two, we've really honed in on our focus areas, what everybody spikes on. And I think, everybody was doing everything in the beginning, similar to a startup. And as you think about the growth stage, everybody kind of has to focus on what they're good at. And now that we have sort of data and years of working together, we know where people need to lean in and where maybe they should pass it off. And so I think that's kind of where we're in the phase now, where it's like, let's just optimize what we're good at. Let's create processes. Let's double down. Similar to a startup, right? Like that's how a venture firm works. And so, that's kind of the phase we've been in now. And you've probably seen us on social media. We launched our new slogan, All Winners Welcome, which is basically this idea that, we want to back the next generation of winners, the people who might look different to the people who were previously successful. And that's always been our mission from the jump.
Yeah, no, I love it. And I also you guys are constantly, and I feel like in this market right now, investing in the early stages is like the toughest thing to do because the good thing is like innovation is at an all-time high, but risk is at an all-time high because so many people are building right now. And also there's a lot of people building things that just aren't venture backable. Everyone's trying to package them up like they are venture backable. And one thing that we've talked about with you in the past is, the ability to bet on character, the ability to bet on really incredible founders, but doing that all on really limited data because of how early we're investing in some of these companies. And I'd love for you to just share a little bit of your insights on how you are evaluating risk with amounts of data.
Yeah, I mean, this is why we're primarily focused on founders at the end of the day, right? It's like markets come and go. I should say hot markets come and go. What's in sort of the cultural zeitgeist, what's in the VC purview changes every year, every few years. Right. But what doesn't change is the founder ultimately. Right. And I think that markets are volatile and you need the person who is able to pivot and make things work regardless of the external factors. right? And so ultimately, when we're looking for founders, we want founders who are doing this for the right reason, who truly are motivated to get to the end. And I think in markets like today, you get a lot of people jumping on a hype train who might not really be in it for the right reasons, right? And so it's important when we think about risk, we're looking for the long haul, right? Like we want to know that this is something that has been so deep in your bones that it's inevitable, right? We don't want you to just have discovered AI and you think you can make a quick buck, right? Because this journey is a lot harder than you think. And so when we're talking to founders, a big thing that we do is we ask them a lot about their personal journey, right? How they grew up, right? Where they lived, things like that. And it doesn't matter their answers. It's just you get to know somebody's motivations and who they are as a person by asking them about their experiences. And that's more telling than talking about a business that's 3 months old, right? And so, a big question we also ask is, what's the earliest entrepreneurial endeavor that you can remember doing? And you'll be surprised that people bring things back to being like 10 years old, right? Like they're at recess and they're like selling candies, and so that it's kind of innate and it's in them and they've found problems and they've solved them. So that's how we de-risk some of our investments at the early stage.
Yeah, that's super helpful. And then, I mean, how are you thinking about, and this is just such a topical thing that I feel like every VC is asking right now, like, what is your moat, right? Like, how do you become defensible in a market that is pretty much indefensible? Yeah. But, sitting on something where, for example, sometimes with us, I feel like because I have such a growth marketing mind, I'm constantly like, what is that one thing that you have today, even if it's like pre-seed, that gives you an unfair advantage? Maybe you came from 25 years of gathering like lending data and you're building this lending startup, or it could be, like I've sold 50 enterprise deals in this market before and I know all the decision makers. So I know how to get to $3 million in revenue. But maybe what are some of those specific things, if any, that you guys are kind of like really leaning into, more so around the moat conversation, like the moats that you're obsessing about right now?
Yeah, I mean, ultimately, I think there's a couple moats that you can look at in this type of market, right? Like the cost of building a company has gone to zero, right? So anybody can build a company, right? Previously, you needed to be technical to build a company. That's not even true anymore. So what you have ultimately at the end of the day is you have speed, right? Like velocity of learning, velocity of shipping product, and you have data, right? So if you're able to get like proprietary data access, it doesn't matter if somebody can whip up a tool. They don't have the data to train the tool the same way that you do, right? So it's sort of asymmetric access to information, right? Or data. And then it's your velocity to ship. And I think it's really important too that the founders have a high slope of learning. So we also test for that, because in a market that's ever changing, what you knew yesterday, it might be completely different to what you need to know today to be successful, right? And so making sure that you have a founder that's able to ingest a lot of information and do something with it, which leads to sort of faster product velocity.
Totally. And I think speed is an underrated one. It actually took me a little bit of time in this market to realize how important speed was. But then you start realizing that, hold on, like I love this space. Anyone can build in this space, but you guys are moving at 200 miles an hour. You moving at 100. 2 months from now, they're going to be two wildly different companies.
Exactly.
But I also think there's something really interesting, and I'm curious how you guys are underwriting this, is scaling really lean. Like everyone's talking about a $1 billion company with 2 employees, but like you can just do so much more. You said it yourself, like the cost of building is zero now. And more than ever, being really shrewd with your capital is really, really important.
Yeah.
And I feel like that's always been something very tough to underwrite unless you've just done it multiple times before.
Totally. I mean, everybody is talking about the revenue per employee number now, right? Like that's a big number that's happening in the ecosystem. Not as much necessarily at the pre-seed and the seed, because you're not that scaled. But I think Lovable just came out. They scaled like 100 million of revenue in a month, right? And then somebody broke it down and they have like $1 million+ of revenue per employee. That's insane output. That is insane output. And so, yeah, I mean, to your point, we're kind of making up new metrics to underwrite businesses now, right? Because the landscape has changed completely.
1,000%. It's something that everyone's obsessing about, and I don't think it's a trend. I think it's something that's going to be like really important to keep an eye on, just in general. Because for myself as a pre-seed and seed investor, I want to know that $1.5 million or $2 million can go for 3-4 years to profitability. Like the amount of conversations I have now where founders are coming to me saying, maybe we'll never raise again. And my immediate answer is like, that's the wrong answer for someone like me who's a power law investor that's investing in generational businesses. But the fact that that can happen in 6 months versus 3 years is really fascinating. It makes me want to just like switch the conversation a bit, because, you talk about this concept of the ripple effect of just like a single yes on some of the investments that you make, that Harlem Capital makes, and the ripple effects of what those investments mean for the world from an inclusivity perspective, from an impact perspective. I know when Harlem was initially born, it came in this like very like inclusivity era, this DEI era, and same for Fiat Ventures. But I'm curious how you've been able to maintain and stay really close to the laurels you were founded on as the market has shifted away from that. It's just like a topical, really important pillar in the market.
Totally. I mean, for us, it's like you lean in when others lean out, right? Ultimately, at the end of the day, that's how you win, right? Is like you find these spaces in the market that others are overlooking, right? And so for us, it's not a problem if people lean out, right? That doesn't mean we're going to lean out. We're going to lean in. If anything, we're going to lean in harder because we realize that actually you're missing a big opportunity, right? And so for us, it's business as usual, right? Like we're going to do what we do. We're going to do what we did from the beginning and the same now. We're just ultimately, and we've always said this from day one, is like we're backing the best founders. The best founders happen to look different to who others back, right? But at the end of the day, they are the best founders. The first qualifier is they are exceptional, right? And so for us, that doesn't change. It doesn't change at all. We hate to see what's happening. It's horrible, but we stay steady.
Yeah. And I mean, these are your words, but of course, like every decision we make is never compromising returns, right? Like
Precisely.
I'm the biggest believer, like you can do good, you can do well. I'm the biggest believer that my background growing up in East Oakland has positively impacted how I approach every single deal in the market and brings a very unique perspective on how I underwrite a founder, think about a market, understand its scale and beyond. And so I agree. I think the market is it's lost sight in a lot of really strong opportunities that I love that Harlem, Fiat, I talked K-Port Capital. I was chatting with them the other day, very similar, but just like that ethos of it's good for us because we're able to find opportunities where no one else is looking.
Exactly.
To your point, exactly.
Exactly. It's like finding these gaps or inefficient. It's really just a market inefficiency at the end of the day, right? And so it's like leaning in to the market inefficiencies, and ultimately the best returns come from investing in market inefficiencies. Right? Like in any industry, if you think about it, right? It's always the market inefficiencies where people will gain the most. And so for us, stays the same.
Yeah. Amen to that. So I am curious, getting back into some of this, like some of like the technicality of where the market is right now. How are you feeling on like the app layer versus the infrastructure layer from an investment standpoint? You hear all the time people being like, "Oh, we invest in the picks and shovels," right? Like, but I'm curious how you're approaching that. It doesn't matter, or are you just looking for talent?
I mean, we're founder focused in general, right? Like we trust the founders we back. But I guess the way that we look at it is we'll invest at the app layer because we also do believe you have the foundation models, right? Like we don't want to invest in things that are going against the foundation models, because that's just a hard build. That's a hard sell. But the foundation models in and of themselves are not built to help the edge cases, right? Like they'll get you 90% of the way there, but they're never going to build in a specific industry, a specific vertical to get that product to be 100% of what you need it to, right? So it requires these sort of applications, if you will, to fine tune the model based on that industry's data, right? And perfect it. So I'm not like I'm not against those. Maybe those could be classified as infrastructure. It depends. But for me, ultimately, I'm trusting the founder to know what they're doing and have done enough customer research. That's important.
Yeah.
To know that they are not only trusting their gut, but it's data driven in some capacity. So at the end of the day, I think there's just a lot of opportunities, whether it's app or infra. You just have to find the right people who actually uniquely know what they're building and have, again, access to asymmetric information.
It's true. Yeah. And one thing I think is interesting is, and I'll be a little vulnerable here. One thing that used to hold me back from investing in a ton of infrastructure is because I wasn't I was never a technical operator. And so I think that's shifting quite a bit now. As I spend all my time, all the time I used to spend watching TV with my wife once my kids were in bed. Now I'm like second and third screening at building my own technologies. Yeah. And it's giving me the ability to become a really good underwriter because 90% of the technology that's being written is on top of a Lovable or a Vercel or like one of the platforms that I'm vibe coding on.
Completely. Well, it is interesting to me, right? Because like back to the point on revenue per employee, that is probably higher than it's ever been, right? But I saw a stat that said the JDs on Indeed for software engineers has never been higher, which is interesting, right? Because everybody's like a software engineer is good, and you're not going to be able to have any more software engineers. Everybody doesn't need to be technical. But I actually don't think that's true, right? It's like you do need somebody who actually understands what they're coding, right? Because that might work for 0 to 1, but when you start going 1 to 10 and beyond, it's like that code base could blow up, And like I've spoken to my brother about this, who's an engineer, and it works to a certain point, but then when you don't have the actual technical talent to be able to audit the code, it becomes a problem, right? So, go figure. Software engineers, said they were going to be obsolete. I don't know if that's happening.
Yeah. Well, I mean, yeah, you think about like groups like companies like Cursor exist, right? Like just to make sure that you can always like have like a big brother on top of code. But I'm the biggest believer, and I say it all the time. I've talked to my team and come in on Mondays being like, I spent like 9 hours like in the middle of the night building stuff. Now I need an actual engineer to like complete the last mile delivery of my product.
Exactly.
It's done. What do I do now? Like right now it's sitting in like I published it, but like now I need to make sure that whatever I get in the hands of people isn't going to just break on day one. Totally. I leaned on Mr. Claude.
Exactly. And I imagine, I can't say this for sure, but I imagine that it's probably similar in that it can get you 90% of the way there, but that last 10% requires specialty, right? It requires skill in that field, right? And so I do imagine that, software engineers are going to be needed in order to actually ship and scale companies at any, in order to ship and scale the companies to the level that people expect, you are going to need people who have that skill, right? You can vibe code your way to probably one, but not.
Yeah. I would say me and you are the extreme example, but I do believe that a lot of, for example, I think that a lot of like QA engineers could probably become engineers now. There are a lot of like fringe engineer roles that can now be engineers, which is exciting because I mean, I've been like, what, let's hire that person because I can tell that person has the mind of an engineer. They could be an engineer at our company. So I think it's super interesting. And I do love that, like the underwriting technical talent, like that gap is closing a bit, but I still think the need for technical talent, to your point, is just like, it's only going to grow. But the good thing is if I spend enough time, we could all have technical talent. But it takes hours. It takes time. Right.
I mean, we can have technical talent in that we can prompt, right? But we can have technical talent in that we can read the code, right? And I wonder where the gap will be in that. Like if that will close.
I agree. Do you feel like you can underwrite, or do you feel more confident in this market investing in founders that don't have a technical leader or co-founder, or like, technical, non-technical? Yeah. I mean, what are your thoughts on that? Has that changed at all?
I can't say for sure across the entire firm that we have like a stance on that. It's actually a really good question. We've done a couple of deals where they didn't have a technical lead yet, but they have since hired and we have helped them hire. I still do think right now it is important to have a technical lead. Like, I'm not sure that we would back somebody who fully was trying to vibe code their entire startup.
Yeah, I would agree with that. I will tell you my biggest fear, and maybe I'm wrong in thinking this, is to your point earlier, the importance of speed in this market. I feel like there's a mixture of this non-technical person that's obsessed around like kind of coding their way with whatever Claude code, like that is optimized for speed, and then having someone else that's making it so you can go as fast as you can, but also move as slowly as possible. So you're doing it in a responsible way. But like, I want to optimize for speed. And I do feel like some of the traditional engineers sometimes are actually slowing us down a bit because they're used to an old way.
Well, it's a trade-off, right? And I think that you want to move as fast as possible, but you're going to hit a wall at some point, right? And so it's like, you do have to balance the risk, right? Where it's like, you could scale and your code base is a little shoddy, right? Because you've vibe coded it and you haven't really been doing the audits and you don't have a technical lead, whatever it is. But at some point, as you keep adding to the code base and adding to the code base, you're going to have a ton of technical debt, right? And with all of that technical debt, then somebody has to come in and sort of revamp it. Then it, does it break and your product breaks when you try to, change that base? I don't know, right? I'm not technical, so this is all just
same
thoughts.
I know we're just going here. Just going here. It does. I want to get out of this because I am not technical, but I've nerded out and just done things. So now I think I'm technical, but I'm not at all. But last question here, because it's an important one, because I think we're aligned on this, and you've talked about this before. It's really just like modernizing the old guard, meaning. Everyone's heard it, like, oh, now we're modernizing HVAC system. We're modernizing, advertising agencies. Basically, this like old guard of like 20% margin businesses now have the ability to turn into 80% margin businesses, putting the right technical infrastructure underneath it. We saw some companies try to do this with within finance, and I think it was a little before its time from an AI perspective. So some like raised a ton, massively failed. But I do feel like we're in a really interesting time right now to truly bring some sex appeal to some of these old dusty industries. And I'm curious how you're approaching it from an investor standpoint.
Yeah, I mean, ultimately, I mentioned this when we spoke last time, right? Is like, we are in a huge generational shift of businesses, family-owned businesses, small businesses, right? Like all of the boomers are passing their businesses down to their children, right? Millennials.
Yep.
Millennials are way more tech forward, right? I think Gen Z is probably more tech forward on the AI front. We're probably better with software. We're learning. But with all of that said, I think there's a huge opportunity here for AI to permeate these legacy industries, if you will. And at Harlem Capital, we actually have a theme called leapfrogging legacy industries. And it's this idea that there are these industries that never even adopted software. They completely skipped over software because it was too much for them to learn. And it required them to just learn the software and use it themselves. But now all of those people can use AI, which is they don't have to learn. They just get outputs, right? They don't need the same inputs. It runs by itself, right? And so they're more willing to invest and pay for the outputs, regardless of learning it or feeling like they're not tech savvy enough, right? Because it's able to just produce outcomes, right? And so I think that when we say leapfrogging legacy industries, that's what we mean, right? Where it's like they could have skipped over software, but now they'll do AI because it does for them.
Yeah.
It doesn't need that, right? And so that's where we see the real opportunity here. And, that comes in the form of for example, we invested in a company called Trash Lab, and they're doing sort of an AI comm center for truckers, right? Truckers are never going to adopt software. They were never going to be on their computer inputting data for you to optimize your route, right? Something like that. However, now if they could just pick up the phone, call, right? And they have AI comms, it does it for them. It puts it in and it optimizes, right? But it doesn't require them to learn anything. They just have to get on the phone, right? And so it's like little things like that where you're able to penetrate these industries that were so unpenetrable before.
Yes. Yeah. I think it's interesting, right? Like AI is helping with what used to be heavy lifts in businesses like that. Like change management was like a nightmare. Like, again, you can flip a switch with AI and all of a sudden, like everyone's an expert in like whatever you need them to be an expert in. And also those legacy industries, a lot of those companies, because they weren't as scalable, like tech scalable, they were operating off balance sheet because they weren't venture backable. And so the investment in technology was so burdensome to them because they weren't like, oh, we'll be operating in the red for 5 years and just keep fundraising. Like, no, we need to be profitable so we can pay bonuses, so we can pay salaries. And that's changing now, which just makes them so much more exciting from a venture standpoint to invest, join that ride, and like help them push through that as a challenge.
Completely.
Really love that insight. Let's round this out with a couple speed questions.
Let's do it.
Very end. I'm just gonna literally answer them in one word, one sentence, whatever you want. The first one: are you an inbox zero person, or are you like leaving a couple hundred laying in there just so you don't forget them?
I'm in between. I'm not inbox zero as much as I would love to be. I probably sit at 15 to 20 a day.
Oh, that's good.
Unread.
Good.
No,
I'm
it's not bad. It's not bad.
Yeah, that's not bad at all, dude. I'm double that, sometimes triple that, depending on how it is. I'm also I'm also horrible at filter. Like I just need someone to come in, and I was on Superhuman. Whatever, I'll stop talking. I was on Superhuman for a bit, and I jumped back.
Superhuman.
What's the biggest? Yeah, it's great. I need to get back on. Shortcuts for the win.
Yeah.
What is your number one AI tool hack that you should share with the world?
AI tool hack. Let me think of an interesting one.
It could just be a tool too.
Yeah, I mean, this is so not original. Maybe I'll say a couple. I use Claude like a coworker. Like truly, I use Claude like it is an assistant. It is an amazing thought partner. I also was a big GenSpark user, which is presentation. So I would use Claude and GenSpark together. Claude would be like the person who can parse through information and then spit out instructions on how to do a presentation. Because Claude presentations are ChatGPT presentations. Yeah. GenSpark creates an amazing presentation. So it's kind of like, for that type of stuff. And recently, internally, we've started building our own Claude projects to automate all of our processes. So basically that means anybody can come in, an intern can come in, and we'll have like our full memo automated. So you just put in a deal, you put in a website, and it's all automated. Obviously, you'll still have people in the loop and stuff, but we're building out custom Claudes for all of our recurring processes.
Love. Yeah, we're doing something similar. I feel like there's a lot of stuff that we have to do as VCs that obviously can be easily optimized.
Completely.
It's a fun project because we have all the data, right? And that's the fun part. It's like, how can we feed it into the output? It's just clean and crisp and engaging. Awesome. And then if you could not invest in any of the spaces you currently invest in, what is like one... What other industry would you invest in solely if you had to?
If I had to, is it because I like the industry, or is it because it's good returns, or like what's the...
I think that's up to you.
Interesting. I honestly think that we don't do consumer. I would do way more consumer because I think when consumer hits, it hits big, right? And so I think a big space is like, this is probably contrarian, is like beauty is like one of those things that
wellness.
It is
wellness and beauty.
Yeah, it is inherently, if it hits big, it is a recurring business. If I use your face moisturizer. I'm using that until the day I die. And I'm ordering it consistently every month, right? Like it is not recurring, but it is recurring, right? Like look at Rode.
Yeah.
Like Rode popped off, right? And so I think
shout out to Haley Bieber. Yeah.
So I would probably invest in more of those spaces that are in and of themselves harder to underwrite because they're not venture scalable at the same rate, right? But like that's incredibly interesting to me because it also plays on human psychology. A lot of consumer business, right? Like you have to dig a bit deeper to understand whether it's going to go viral or not. And I kind of love that.
That's true. A place that is a space where speed and distribution are literally everything.
Totally.
I always say, I was like, dude, Sephora should have the biggest venture fund on earth. They got the craziest pipeline of data. Like I'd be deploying $1 billion a year. Like
exactly.
Crazy.
And they have a distribution.
That's what I'm saying. They have everything. It's vertically integrated.
Yeah. No, you're right. I'm like Sephora.
Yeah, another lifetime. We'll chat offline. Offline. Cool. And then on that same topic, last question. What's your greatest wellness hack?
Oh, my greatest wellness hack. I really try at the end of the night to read instead of looking at my phone. It helps me fall asleep pretty instantly. It turns off my brain. And I think it's just really bad to continuously scroll. And so I'm a big believer in reading at the end of the night for like 30 minutes.
You know what? Everyone should hear that.
Yeah.
Read before you go to bed. I'm saying it to myself as well.
Yeah.
But that's awesome. That's awesome. Nicole DeTommaso, thank you so much for spending time. Always appreciate it. This was awesome. Thank you.
Brilliant. Thank you so much for having me.
This season is supported by Silicon Valley Bank. For decades, Silicon Valley Bank has been a true partner to the innovation economy, helping both founders and funders grow. Silicon Valley Bank, a division of First Citizens Bank, member FDIC. Please note, this podcast is for informational purposes and not investment, financial, or legal advice. The views expressed are those of the speakers and do not necessarily reflect the position of Silicon Valley Bank.